The Fed is set to cut rates tomorrow by either 0.25 or zero point 0.5 basis points. And you want to be ready for some opportunities that may spur to the upside. But for a lot of bigger players, some big tech companies, some semiconductors that you're familiar with that we'll talk about today, could potentially have a little bit of a pullback before spurring higher. So we want to have a couple of opportunities of both sides. Whatever happens, it could be a fake out and a pump fake, or we could spur higher. So I want to give some opportunities for you today for some buying opportunities leading into tomorrow before the 2 p.m. Eastern Standard Time Fed rate cut, the FOMC meeting. And also I want to give some opportunities of how you can day trade some of our top tech stocks that may be a little bit overextended in some levels on those. Okay. So without further ado, welcome to the channel. My name is Dr. B. Hope you are doing well. You can check out my information down below. Join our Discord where we do live trading. We have long-term share options, opportunities for buy levels. So if you're a long-term investor, but you don't necessarily want to trade and you want some levels that are a little bit more clear, you're welcome to join as well. And this is a beginner-friendly channel. So if you're a beginner, intermediate, or advanced, I'm going to speak in all tones, but I want to make sure to keep this ball rolling. All right. So if you want to learn a little bit more, their Discord is where it is, or you can check out the videos on the channel. All right. Without further ado, let's jump into it today. And I'm going to start off with our top watch here, which is going to be IWM. This is the small cap company ETF, the Russell 2000. Okay. So I'm going to go into it in just a second, but here on the chart, the Russell 2000 or IWM or the small cap companies are the main ones that benefit from rate cuts because they're looking to borrow money to grow their company, right? So they have cash flow, they're short on cash, or maybe they have cash flow, but they can't borrow against the company as much as they want to because they're trying to get into profitability, to grow, to get into mid cap and large cap opportunities. So they're growing the company, okay? So this is a main mover typically when you have rate cuts or more rate sensitive companies that benefit from these rate cuts. Okay. So I want to look here on IWM. And you can see that we had a great move. I'm going to start on the weekly chart here just to clean it up a little bit. We had a great move from the lows at 170. We reclaimed 216 here, and then we held that pullback right there and we reclaimed. Now, what we do have is a couple of crosses on some moving averages on a weekly. And then we have a nice hold of these moving averages here on a daily 200, daily 100, daily 50, and daily 20. All right. So if you're a beginner and you're just looking for simplicity, as long as we hold above this 235 mark, okay, we are still bullish. Okay. So as long as we hold above that 235 level on IWM, even if we get a pullback into it, so I'll show how it looks like, even if we get a pullback into that level like that and then spur higher, that is an opportunity for IWM to go higher. All right. We want to hold that 235. Okay. So that's what you're looking for, is that type of idea. A target, if you're, again, trying to stay, really simple, I'm looking for IWM if it reacts positively to break above 240 and to start heading to that 243 to 245 range. Okay. So 240 is our breaking point, and then going to that 243 and then 245 mark. I'm going to put it on a monthly chart here so you can see all-time highs are sitting right at 242.35, and then we have some monthly closes above, right underneath 240. So we haven't had a monthly push that is closed above 240 just yet. So if we start pushing above 240, that could be that move. If you see that break above 240, you can take it up a couple of points, all right, into a new push. All right, so IWM main watch with the rate cuts. All right, now it's all about the response. So we don't want to guess, gamble, or anything like that. So if you're trading it with options, okay, the idea for FOMC, it comes out at 2, or the meeting starts at 2 p.m. Eastern Standard Time. Fed Powell typically starts speaking around the 2:15 to 2:30 time frame. So you'll get a initial reaction at 2 p.m. Eastern. If you've never seen it before, the market will move very quickly in one direction or the other. And then we'll get the answer, how many basis points, and then Fed Powell will start talking. Okay. So if you're new to trading during the FOMC, be mindful that these are when fake outs happen. You want to kind of let the dust settle. But if you're familiar, you already know if you can scalp and move very quickly. If you have Robinhood Legend where you can do market orders, you're on a computer, you can do things really quickly. Cool, right? But the best opportunities, gold standard, is to wait until typically after he stops speaking or wait until Thursday morning. All right. So a lot of traders do take off for FOMC just to watch it, and some like to scalp very quick trades while it's going on to make their opportunities. All right, so IWM is a top watch for the Fed meeting. Now, let me give a devil's advocate move here. I'm looking at the bullish move, as you can see, bull flagging up, right, and taking out that high and going higher. All right, but a devil's advocate move could be a fake out where we pump higher and then drastically do something like that. All right, so I'm prepared for both, but I'm thinking more of the bullish nature first and going higher in this channel. Okay, so I'm watching that, but also the reaction to it as well, because we have had pump fakes and come right back down like that. All right, cool. All right, let's go into IWM, and that leads into the next question, which is, Brian, what are the things that, if I'm a long-term investor, that I may want to look at purchasing or keeping on my watch, or if I have in my portfolio? If you're looking at IWM, you just type in IWM, iShares, Russell 2000 ETF, and it shows you the companies that are small caps. So if you're ever wondering how these investors or traders or people find these companies before they take off, you want to kind of check out these in the Russell 2000. Okay. So we found inside of Leverage, we found as a community, all right, we had a little help from a community member that gave us the go ahead and the research, but Ionic was one of these that is at the top of the iShares Russell 2000. Okay. And you can see it's in the Russell 2000. Ionic went from about $6 to close to almost $70 now. So Ionic right there. Some of these other ones you can, research yourself, but Katos is another one that's been doing very well. HIMS, a lot of you are familiar with. Oklo, right? You're familiar with. So a lot of familiar names that you've maybe heard in the trading or investing streets are in this Russell 2000. So if you're ever researching, you want to find new companies to take a look at, especially if you are getting more comfortable with the charts, right? So let's just pick one together really quick, and let's look at, mod. Okay. Actually, I don't like the sector it's in. Let's look at a sector that's maybe materials or healthcare. CMC. Let's just take a look at CMC's chart. Okay. If we go into a monthly chart, look at that. All right. This was one of those that was, a small cap company, up and coming. Once it became profitable, it was at $13 in 2020, and then it's now at $63. All right. We go to, and it shows weight as well. Okay. So percentage weight. So typically the first sector is going to be the best. So let's go to FN, Fabrinet, and look at that. My goodness. Okay, 2020, it was at $50. It's at $380 now. $90 in 2023. There it is. So a lot of these small cap companies can run. How many of you are familiar with Sprouts? SFN. Right, Sprouts pulling back nicely here, but at one point it was at $30. It went to $182, pulling back nicely. So that might be an opportunity for a dip buy once it cools off where it needs to cool off. So you get the point, right? Check out the IWM, the iShares 2000. Now what I'll go to is some of my watch list that I want you to pay attention to. Again, other than IWM, is going to be our finance sector. Okay, so let's first go into SoFi. A lot of people's favorite here, SoFi. A lot of dip buys that we bought underneath $10 for shares. Okay, so SoFi rotating back up, taking out $30. We're going to start squeezing into new highs. Okay, so really watching for that break of 28.26 or that simply like $30 level. We want to watch this breakout if SoFi starts breaking out like that, which is a possibility. Okay. So watch for that breakout above 28.26, SoFi above 30. We're going to start squeezing into $10 increments, 35, 40, 45, 50, things like that. Okay. So SoFi, top watch. If you're already in, great. If you're looking to trade it, right, any pullbacks on SoFi are going to be a nice opportunity. I would love a bigger pullback, potentially. I'm not saying it will do this, but if it gets stuck, please, please, please give us that, 20 to 25 mark again like that. Right. So if we get a deeper pullback, breaks some new highs, comes back, it's possible. Right. I'll show you on the next one. HIMS. Okay. kind of right here, what HIMS did, it broke into 20, came back, rotated back up, right? Oops, that's SoFi. I'm sorry. SoFi still. There's HIMS. See how HIMS with all-time highs right there? People thought it was going to break out, went to 73, pulled all the way back to 42. Now it's starting to consolidate again. This is another one, again, like I said, in the IWM ETF that is a $100 plus stock, in my opinion. So watch it around 40 bucks. Any pullback, $40 to $50. I love it. This was a great buy area around 40. It's consolidating. If it pulls deeper into this level like that, right? Again, another buy level around 40 to 45 bucks, rotating right back up. Okay. HIMS look going to start looking like that. And this is where technical analysis and the charts help you out, because you can follow the technicals on solid companies as long as you've done your due diligence on the company. Okay. Let's keep moving here on Hood. Okay. Okay. Hood is at all-time highs. It's interesting. And I like this gap on it. We've been day trading this one a lot. So this is one of my day trading ones that I'll be watching tomorrow and into the remainder of the week, what the market does. I would love Hood to pop a little bit higher. And I think it can cool off a little bit. Maybe not that far, but maybe back to the 110 mark. If it gets below 110, we're coming to that gap. But I would love a 110 pullback on Robinhood. So we'll see what it does. If it can give us that, we've been day trading it nice. We have a community member that's only day trading Hood. Shout out to Dreama. Has been killing it. So we'll be watching this Hood level here. If this turns into be a bull flag and wants to rotate back to the top, okay, trying to take out that high. All right. So Hood above 118, ideally above 120. All right. That is where I'm looking at Hood, but it is a little bit overextended. So just want to be mindful of that. And it was running into its summit that it had here in Las Vegas. All right. So all these in green are going to be my kind of finance movers. All right. So bigger movers, obviously GS and JP Morgan, Hood, but SoFi, we talked about Affirm. Okay. Firm is going to be another one that is already moving, but moving very nicely. You see this rotation all the way back up. There's your target at the top, trying to get to 100. And that is a target that Affirm, I believe, can break through. So once it breaks through 100, we're off to the races. But Affirm, higher lows, higher lows, higher highs, higher highs, higher highs. So Affirm, watch for this breakout above maybe 90 right now. Breakout above 90, start rotating and squeezing, trying to retest these markers here, which would be 93, 95, and then ultimately 100. All right. All the way back up to the high. All right. Upstart. Great level at 60 bucks. So very close. Look at this Upstart pullback right here at 60. Okay. I'll show you on a weekly chart what it looks like. All right. If you've been watching me for a minute, or you've been learning, or if you're more advanced, you see this previous high here and these lows around that weekly $60 level, breakout above 60, pulling back, breakout above, pull back, and starting to hold on a weekly. So typically when that happens, we try to see if it can start rotating back up to take out the high, ultimately trying to get to that $100 mark and looking like that. So Upstart, love it. It's rotating very nicely here. It just needs a nice breakout to get going. So at one point, Upstart was at $400. All right. So we want to keep an eye on these. Upstart, I think it's still a great buy underneath $100, anywhere around 50 to 70 bucks. You're in range on Upstart. All right. Let's go into a couple more and I'll get you up out of here. Anything in my white right here are long-term, or they are in a great dip buy opportunity. Let's talk about Okta. Okay. Oklo already broke out tremendously. We had Oklo underneath $20. I'll show you inside of our Discord here. Oklo right there. And I mentioned at the beginning of the year, you can see right there, January 2025, Oklo, telling our community about it right here at 10. There's the bull flag at 18 to 20 and an opportunity. Cool. Buying. There's a breakout into 30. And then it is now absolutely taken off after its earnings. There's the chart now at 95. So Oklo's already kind of broken out, but Okta has an opportunity here where It's at a nice support level around, it's not as cheap, obviously, but around this $80 to $90 range, right? It has a nice move back up to fill this gap. So, what you want to watch, if you're not a technical person yet, is you start to see trends. When it starts to trend down slowly like this and starts to base and base and base, all we're watching for is a move like this. The longer it sits at a previous level, you're watching for it to rotate. Once it starts breaking out and rotating, that's when it starts going. All right. So this is a great dip buy opportunity. From the highs, it is off about 33%. All right. From those most recent highs. So Okta, in my opinion, good buy opportunity around 80 to 90 bucks. Okay. For shares and or options. Okay. So this is a quick update before the FOMC. So I'm not going to go into specific levels. Okay. Or excuse me, specific options contracts. All right. Lyft already breaking out of a monthly. That looks good. We've been talking about it, grabbing shares anywhere $20. It's breaking out above 20 monthly level here. It's got 30 in sight. If it gets above 30, we're going to start retesting a lot of these highs up here as it could go crazy. All right. So just monitoring level to level, but anywhere around $18, $20, still a great buy for Lyft. Let's see. Oscar Health. It's another one, another small cap company breaking out this bull flag and pulling back anywhere around $15. I got a price target of 25 to 30 on Oscar Health, 25 to 30. All right. So as you're taking notes, you might have to rewatch this back. Even look at this watch list over here. I know it's a lot, but I'll finish up with some dividend stocks. Okay. So these are 3 dividends that I think are at a great dip buy right now. UPS, great buy opportunity, in my opinion, just for the dividend shares. Okay. Double bottom, nice rotation, target potentially. First got to break above 90, right? But I got a $90 target in the short term, breaks above 90. We got potentially a squeeze back to 95, 100. All right. Starbucks, also a good dividend, sitting right at 80 bucks, right where it was last time. Nice double bottom, holds 80, got an $87 target, and ultimately a $90 target. Gets above 90, we can start squeezing back to this $100 level. Okay. Final one. Some of you may like it, some of you may not. You can choose what you want to do with it, but Target is a great dividend stock. Okay. So Target around 80 bucks, even though y'all think Target's going out of business, it is not anytime soon, and it will recover in due time. All right. So Target, anywhere around same price target as UPS, 80 to 90 bucks for those shares. You can start getting some type of position if you have not already. Okay. Target could rotate right back up to 100 and be back there before you know it. Once it gets out of this slow downtrend, right? And people stop shorting it, shorts get trapped, and it squeezes right back up to 100 plus. All right. So Target sitting at support. Last time it was at 85, went right back to 100. All right. So look at Target. That one's another one. Couple other notable mentions. DocuSign, great bull flag here coming out of DocuSign. A lot of these COVID stocks kind of picking up. Zoom, DocuSign, great bull flag here. This could rotate very nicely up to the highs on DocuSign. So another bullish move there that could move really nicely. Snapchat. This one right here kind of snuck up when I was doing my research today that it has been basing. It is at a monthly low at $5 to $6 on a monthly level. You can see right here, and starting to get some volume picking up. I'm not saying Snapchat is going to go crazy, but it might fill this gap for anybody that wants to short trade it, equity trade it. This could easily go from, this 750 mark up to $9. So that is a nice move, as you can see on options. A monthly option right now, already up 46% on those. You can see right now they're only 40 bucks. So today they moved 46%. Okay. So do with that what you please. Even closer options, if someone was scalping it, 60% on those, and they were only 20 bucks. So this is a great potential opportunity for someone, that wants to learn how to day trade a little bit without a lot of risk. You could look at Snapchat and maybe look at that for an option, not financial advice, but look for an option all the way out till November or January, right? Look at these open interest on it. That just is the interest that individuals are purchasing up or have positions already inside. So the higher the open interest, it gives an opportunity of how many people are also looking at that or already in that position. All right. So right there, we already gave our target $9. These are already moving. So those are only $78. Okay. Very inexpensive for a January contract. All right. So here's my final kind of free game plan there. Hopefully y'all are doing well. And also, thank you so much for the support. Make sure you hit that like, subscribe, and share this out with anybody. And rewatch it, right? Rewatch it. If you need opportunities, look at my watch list here. I'll scroll one last time. The white is long-term, things that are on discount right now that could move within the next year to 2 years. And I'm missing some. I'm adding continuously, still looking for opportunities. The orange is more so kind of slower, steady movers that I may want to day trade, but also may want to watch for long-term. And then I put my green kind of finance a little bit, and then semiconductors or kind of little like tech companies like Palantir, Oracle, Marvel Technology. That one is looking pretty good for this gap fill. And then my main kind of movers day in and day out right here: Apple, Google, Amazon, Microsoft, Meta, Tesla, pretty much the Mag 7. All right. Thank y'all so much. Peace, love, and blessings. See you in the next one. Bye-bye.